So as I said, this is the Tax and Business Basics for Self-Employed. Here's what we're going to cover today from my point. We're going to talk about how to register your business once you get started in business, what to do once you start selling products, how to go about getting your permits. We're going to talk about invoices and receipts and how those should be constructed. We're going to talk a little bit about tax-exempt transactions, and what you should know about them, and how you can use them to save money, and you can save your customers money as well. We're going to talk about some reporting requirements that you should be aware of, and then we're going to talk about electronic access. Okay. When you've decided you're going to start a business, one of the first things you want to do is register and name your business with the Secretary of State. You'll do this at business.idaho.gov/register-a-business. Now, it does cost a little bit to register your business. I have a voiceover business, and when I registered that as a sole proprietor, I believe it was $20, possibly $25, so it wasn't a huge expense. The more complex the business, the higher that cost goes. I would also recommend getting an EIN from the IRS. Now, they are not mandatory unless you have employees. If you have employees, you're going to have an EIN. But if you don't have an EIN, you're going to need to use your Social Security number for some of this stuff. And as I will mention several times when I go through this, really, really recommend against having your Social Security number in line with your business. Try to keep your business funds and your personal funds separate. Okay, that should be a main goal. Keep those things separate. It makes your accounting much easier. The nice thing is that the EINs are free and they're pretty easy to get. So even if you don't need it right now, I still think it's a good idea to have one available. And then also, if you're going to open up a business bank account, a lot of them actually require an EIN for a business account. Okay. Bear with me just one moment. I have a question in here. Somebody's having a problem. Okay. Nope. You're just very proactive about your email. I will get that handed out to you. And then I would start applying for permits. This is something called an IBR, an Idaho Business Registration. I'm going to go through this in a little more detail. Just know that it probably takes a couple of weeks for this to actually happen, a couple of 3 weeks. So this one does take some time. And then after you get all your permit numbers or your account numbers, I would create an account on TAP. That's that electronic access that I'm going to talk about. That will also save you a lot of time and stress being able to do that. 3 and 4 are going to take a little bit of time. So while you're waiting for those, I would get busy building a website. It's almost standard business practice now to have a website. I know here at the Tax Commission, we're a bunch of accountants. We deal with numbers. We don't really like to go outside. So if we have a food truck that rolls up in the parking lot, we're going to look online to see what it is, to see what they offer, to see how much it is, to see whether we actually want to go outside and touch grass. So a website is pretty standard business practice now, and there's a lot of places that can build them for you, and they're relatively inexpensive. I built mine for my voiceover business. Hey, it's not perfect, but I think it took me an hour, and it cost me about $100 to host it every year, so it's fine. And then again, because you want to keep your funds separate between business and personal, I would open up a business bank account. Any questions on that? Okay, we're moving on. So, when do you need to actually get a business permit? Well, there's this thing in Idaho called tangible personal property. Now, tangible personal property is pretty much anything that you can pick up, you can carry, eat, stuff, basic physical stuff that's not including real property. Idaho has a 6% sales tax on all tangible personal property. And this tax is not part of your income. It belongs to the state, and you're just collecting it from your customers for us. On behalf of everybody, I just want to say thank you for that. I really do appreciate it. So, who needs a seller's permit? Well, if you're making sales of tangible personal property in the state of Idaho that require you to collect sales tax, then you're going to need to have a seller's permit because you need to remit that back to the state. And in order to do that, you'll need the tax permit because we have to know where it came from. There you go, the circle of life. Now, it says here, unless there's an exemption. There are quite a few exemptions. We're going to go over some of the more common ones here in just a second. But there's also scenarios that we have to pay attention to. And one of them here, just because of where we live and work, is goods that are shipped to another state. You're going to charge Idaho sales tax if the buyer arranges shipping or if they pick up the goods. You're not going to charge sales tax, at least Idaho sales tax, on goods that were delivered to another state by your company vehicle or by a common carrier. The key difference between these two is where the customer takes possession of the product. If you deliver it or you arrange the shipping to another state, you, or your agent, still have possession until it reaches the final destination. The transfer of the property takes place in the other state, so there's no Idaho sales tax due. Now, if the buyer comes to Idaho to pick up the goods, or if they arrange for the shipping, they took possession of the product in Idaho. So that means the transaction is taxable in Idaho. And just as a side note, Idaho does not exempt buyers from non-taxing states. If they're buying products in Idaho, they're subject to sales tax in Idaho. But this leaves us with another little interesting dilemma. What about goods that are shipped to another state? If you're shipping a lot of goods to a specific state, you're going to need to research that state's threshold for sales tax. There was a court decision a few years ago called Wayfair versus South Dakota. And this decision allowed states to collect sales tax for items that were shipped into their states. But each state has their own requirements.
Okay.
Because, of course, they do. So you're going to need to do a little bit of research for each particular state and find out what their threshold is. Some of them, it is the first dollar of sales into their state. Some of them, you don't reach that threshold until it's $5,000. It varies from state to state. The nice thing is that it's pretty easy to find on the Idaho State Tax Commission's equivalent for other states website. There are also some other companies out there that have maps that can help you. But that is some research you'll need to do. Okay. Oh, and if you're using like a marketplace, like Etsy or Amazon or one of those, check to see if they're already collecting and remitting the sales tax for you, because a lot of them do, which will make it super easy for you. Okay, so I mentioned that we need to get these accounts. So where are we going to go for this? Well, we're going to go here, tax.idaho.gov. This is our main web page. This is where all of our information is. This is where you can reach us. This is where TAP is. You're going to be here a lot, okay? Right now, we're looking at getting tax remits. And at the time that I took this screenshot, it was under business, and it was right in the middle, right at the top. This is a live web page, so it will not stay this way for all time. So you may have to click on it and dig in to find it. But we're looking for getting tax remits. So when we click on that, we're going to go here. So this gives you a bunch of information about what we're looking for. So how do I get my business permit? There's a helpful video there. And then what resources does the Tax Commission offer for expanding businesses? Also pretty helpful video there. Top half of this page is for new businesses, kind of walks through what to expect. And then there's a link to the Idaho Business Registration application. That's the green box. If you want to fill it out online, you click the green box. I don't know if you can see it, but right below it, it says you can print out and mail in a PDF. If you don't want to do it online, you'd rather do it by paper, you can download the PDF, you can print it out, you can fill it out that way, and then mail it back to us. It will take longer to process those if they're by paper. Okay. And then from here, if you scroll down, there's information about existing businesses. And this is kind of explaining that there's only one application, and once you've submitted it, it's locked, so you can't change it. So if you initially set up your business as a sole proprietor, it was just you didn't have any employees, and that's how you answered all the questions for the IBR, so they didn't issue you a withholding account number or anything. And then 2 years down the road, business picks up, you're like, I need to hire some people, I can't do this by myself, which is cool. You're going to need to go through and complete another application. You can't change the one you already did. So just complete a new one. And then somewhere in that application, I think it's like a third of the way through, they're going to ask you if you have any existing account numbers. just put in the existing sales and use tax permit or anything else you have, and then they'll cross-reference those and they won't double issue permits. If you forget that and you end up getting 2 sales and use tax permits or something like that, we can fix it. It takes a little bit of time, but it is fixable, so don't panic. But you can avoid it by just putting in existing permit numbers. Any questions on that? Okay, so if you click on the green box, this is where it's going to take you. This is the Idaho Business Registration System. Quite a bit of information about what you can expect here, some things that you may be asked for. Unless you're doing like a full-blown corporation with boards of directors and everything, there's some of the stuff you're just not going to need. When I filled it out for my little company, I think it took me an hour, and I was poring over everything and really stressing about things. So I would expect an hour, maybe 2. And the nice thing is you don't have to complete the IBR all in one shot. If you get into it and you're like, oh, they're asking me some questions about this and I'm not exactly sure how I'm going to do that, I'm going to put this on pause. So you just save it and then get out. Don't submit it, but just get out. And then when you have your answers or you're ready to start again, you'll just log in where it says returning to complete a registration, put in your username and password that you selected, and then you can log right back in and take off where you left off. First-time users, you're going to click where it says begin new registration, and you're going to create a new account. And then once you've done that, you're going to start the adventure. The way that the IBR works is it's going to ask you a series of questions, and all it's doing is trying to figure out how your business is going to be constructed so that we know whether you need unemployment insurance, if you need a withholding account, if you need auditory and district accounts, if you need beer and wine taxes, just anything that you might need. It's a one-stop shop for all of that. Now, it does go to the Idaho Industrial Commission first, then it goes to the Idaho Department of Labor, and then it comes to the Tax Commission. So we get it last. So you may see your other permits and other account numbers and information first before you get it from us. Okay. Okay. So once you've had your permits and you're ready to go, there's some things about invoices or receipts that you need to be aware of. And I'm going to go through these because these are for your benefit, as well as ours. If something happens and you end up getting, and I hate using this word because people freak out about it, you end up getting audited, proper invoicing and proper receipts can be a savior for you. So I'm just going to give you this information so you know what it should look like so you don't have to worry about it. Some things to be aware of. Sales tax needs to be listed as a separate line item on any invoice or receipt. Includes tax, don't do that. Also, don't advertise that you're going to pay the tax for the customer or advertise that there's no sales tax. You want the sales tax to be explicitly on the invoice or the receipt because those are what we're going to look at if we have to come asking questions. So you want that there. So what do I mean by this? Well, let's just walk through a simple invoice. This is for Awesome Auto Repair. So the customer had a brake job done. They had 2 brake pads. That was $50 a piece. Brake pads are something that you can pick up and you can carry, so they are tangible personal property, so those are taxable. Same thing for the brake shoes. There were 2 brake shoes at $100 a piece. Those are also tangible personal property, so those are taxable. And then the labor. They charged $100 to do the brake job. Very reasonable, but labor in Idaho isn't taxable. It's like a service, not taxable. So there's no T in the column for that. So what we have is a subtotal of $400, but $300 of it is taxable. So 6% of $300 is $18. So the total due is going to be $418. Now, let's say you got a brake job done at Average Auto Repair, and they didn't break it out this way. They just said brake job, $400. Because the brake job included tangible personal property and they didn't break it out, now the whole thing becomes taxable. So instead of $418, theirs is going to be $424. And it's $6, but if you're looking at 2 companies, they both do the same thing, they both have the same quality, and one of them's $418 and the other one's $424, $6 is $6, right? So you can actually save your customers money too by breaking stuff out like this. So remember I talked about exemptions. We're going to start going over the most common ones right now. And the one you're more likely to see than not is something called an ST-101. So this is a sales tax resale or exemption certificate. If you're buying items for resale or wholesaling or producing items for sale, you can buy your products exempt from sales tax using this form. Again, it's called the ST-101. You may also receive these forms from your customers, so you are not required to collect tax from them. So this is what I mean by you can save yourself money and you can save your customers money. Now for the ST-101, there are 4 pages of instructions for it. They explain most of the exemptions for it and how it works. It is a pretty simple document. Okay. Real quickly, there's another one of these. It's called the ST-103C, and this is for real property contractors. So this one is solely focused on real property contractors. They're going to work the same. You can use this to buy products if you're a real property contractor. You can use this to not get charged sales tax for the stuff that you're buying for resale, or you have a contractor exemption. Or you can have somebody give it to you if they are buying items for resale or using a contractor exemption. For the ST-103C, there is 1 page of instructions. Like I said, it's pretty simple. That's what the page looks like. What I would recommend is that you go out to our website, tax.idaho.gov, you search for forms, and you look for an ST-101 and the ST-103C. I would download both of these and then print out copies of it, and then when you go to buy products for your store or your business, see if you can use this. You can save yourself money, but also have these available, and then anybody who handles money for you. So anybody who works up front, anybody who works a cash register, anybody who does any kind of sales, make sure they're familiar with what these forms are and how you want them to process them. Because what will happen, and I have seen it happen, is that it'll be busy on a Saturday. You know, the sun is out, people are starting to do stuff, and you have a line of people wanting to buy products, and somebody hands your person working the cash register one of these forms, and they do not know what to do. Everything grinds to a halt. And I don't know if you've noticed this, but we are not the most patient people in the world anymore. So it starts to get long, people are getting bored, they just put their stuff down and walk away. Now you're losing sales. So just a little pre-training for anybody who works the front, who handles money, of what this form is and what you want them to do with it. So that when that happens, and they're like, oh, yeah, I know what this is, here you go. And they know how to process it, and there's no big delay. The form itself is pretty easy. You're going to have the buyer's information and the seller's information filled out. So name, address, city, state, zip. And then there's 1 of 2 categories. Now for most buyers, we're going to fall into one of the first 2 categories on the page. So if you're buying for resale and you're a producer, you only have to fill out 1 section, either 1 or 2. You don't have to do both. Okay. If you're buying items for resale, you'll select the first section. If you sell retail in Idaho, you're going to need to include your seller's permit number. And then sellers qualifying for other exemptions that's listed there will not have to do that. For most of us, we're going to be an Idaho registered retailer. And so we'll check that box and we'll put in our seller's permit number. And then we need to list the primary nature of our business in that little box and then describe the products that we sell, rent, or lease. Now, if you're a wholesaler only with no retail sales, or you're selling through a marketplace facilitator or any of the other boxes, just check the box. And then you hand that to the retailer, and then they can choose. It is not mandatory that you accept it, but as a retailer, they can choose to accept this and like, okay, well, I'm not going to charge you tax for this sale. And then what they'll do is they will keep track of this sale, because you're going to have to account for that later when you do your reporting. I know that Tractor Supply will actually assign you a customer number, and it's your phone number, or at least it was. So if you come in and buy something, let's say I'm selling eggs, which is probably a lucrative market right now. I'm selling eggs, and I go into Tractor Supply to buy some feed for my chickens. Well, I'm buying the feed in relationship to my business. So I'm going to use my ST101 and I'm going to buy the feed and not pay sales tax on it. So when I go in there with my 200 pounds of feed, they're like, hey, do you have an account number? It's like, yep, give them my phone number. They pull it up and they see that I have an ST101 on file. I'm like, okay, do you want to use your ST101? I do. And they won't charge me sales tax for that. Not all businesses do this. I don't think Walmart takes these things. And if they don't, there are other ways to recoup those taxes if you didn't have to do them, if you didn't have to pay them. I don't remember the name of that form. Mark, what's the name of that form they can fill out to get sales taxes back that they shouldn't have paid?
It's the form TCR.
TCR.
Right.
Okay. So yeah, if it does happen, if you want to use this and they won't take it, you can find another form called a TCR, fill that out and send it in to us, and you can recapture the taxes that you don't think you should have paid that way. Now for producer, we're going to go to the bottom part where it says producer exemptions. So as a producer, you don't need a seller permit number unless you're going to make sales, but this will allow you to purchase your supplies without paying taxes on them. It doesn't apply to everything that you buy, only to the supplies that are directly related to your business. Okay? So what you'll do as a producer, you put in that little box what you're in the nature of producing. Oh, let me click the slide, sorry. And then check the box that applies. If you are ranching and farming, then check both boxes. Or just check one. As long as one is checked, we're all good. But that's the ST101. The ST103C works the same way, it's just real property. Like I said, it's important that you understand how to use this so that you can save yourself some money and you can save your customers money. Any questions on that? Okie doke. So now I'm going to talk a little bit about reporting. Reporting can make your life a lot easier if you have good reporting on hand, good organization, so that for some reason somebody just come by and starts asking questions, you're not super stressed about it because you know where everything is and you know that your reporting is on point. So some notes. Sales tax is due in a reporting period that sale takes place. You can't defer sales tax. And you're required to file a return even if you've had no sales. So, Jeff has a question. I don't understand who the buyer and the seller is. So is the seller Napa and you're the buyer? Yeah, so let's say you're buying brake shoes. You need to restock, so you're buying brake shoes for your business. Yeah, so you would be the buyer. Napa is the seller. Does that make sense? Okay, good. So the last bullet point here, you're required to file a return even if you've had no sales. Some people think that, you know, I didn't do any sales this reporting period, so I'm just not going to file a return. That is not a good idea. We're going to assume that you forgot to file, and so we're going to assume some value to your sales and to the taxes that were collected. That value will not be zero. So you will end up with penalty and interest and tax due. Now, would you be able to fight it? Sure, you can, but it's much easier to just file a $0 return. It doesn't cost you anything, maybe a stamp if you're doing it by paper, but that will save you. Like I said, I have a voiceover business. It is very spotty. I'll go through runs where I'm super busy, and then I'll go through months where I don't do anything. During those times when I don't do anything, I just file $0 returns. It takes me 5 minutes to do it through TAP. But I make sure that I do it because I don't want them to have to guess. You don't ever want us to guess. We're really bad at guessing. So here's how you're going to report your sales and use taxes. It is called a Form 850, and we send these out to you. So the way this form is constructed, you're going to have your permit number listed there, when it is for, the taxes, the due date for them, that tax due on or before also works as a postmark. So if you're mailing it in, as long as it is postmarked by, what is that, October 21st, you're okay. If it's after that, then you may have penalty and interest. And then you'll see across the bottom on the right, it looks like it's a check register or a deposit slip. It's because that's kind of what it is. This machine language here has all your relevant account numbers, due dates, where this is supposed to go, all of that. Very important stuff. So the reason I'm pointing this out, I'll get to you in just a second, Mariel. The reason I'm pointing this out is if you've lost it, and you just like, I found the photo of this thing, so I just took out the stuff that has the numbers and everything, and I'm just going to send this in. It won't go where it is supposed to, so you won't get credit for it. So Mariel has a question. It's a really good one. Is this quarterly or once a year? It's either going to be monthly or quarterly, depending on when you're required to file. So when you go through and fill out the IBR to get your permits, some of those questions are going to be asking about what you expect your volume to be, how much sales do you expect to have, all of that. And they're going to take that information and they're going to look at it and say, well, we think if you're going to do this much business, then we're going to have you file quarterly. Okay. So for you, it'll be quarterly. Now, if somebody's doing a lot of business, you know, we don't want them having to hold on to hundreds of thousands of dollars worth of tax dollars, right? So they're going to file more often. They'll file monthly. But you will know what it is. And that's not always going to stay that way. Sometimes it changes. So if we initially say, hey, you know, you said I'm going to do, you know, X amount a month, and we're like, ooh, okay, we're going to have you file monthly. And then it turns out the business didn't really take off that well. And so you've been doing a lot of like $0 returns or things like that. They're going to say, well, you know what, we're going to change you to filing monthly. And I think they go through and review that yearly. So it doesn't change very often, but it can. It will always be more than once a year. And it will tell you what it is on your forms. So to fill this form out, all you need to do is fill out this stuff on the right side that I just blew up here. And we'll walk through one. So what I do is I pull up my accounting software. Everybody has accounting software, right? That would be super important. Now, you can do it by ledger if you're old school. I am not. So I have accounting software. I have used a lot of different ones, but the most common ones that are out there, they all work fine. So I can't have a preference over one, and in honesty, I don't have a preference over one. So they all work the way they're supposed to. Now let's see, we got questions rolling in. Perfect. In my business, I already registered, but without sales tax, and I need to now add sales tax. How do I change that? Do you have your permit numbers already, Lara? Let me move this up so I can see. Okay, so what you'll do is you'll go back and you'll do another IBR. And then when they go to, they start asking you the questions about your sales and whatnot, put in the new data. And then they will take that data and they're like, okay, yeah, we need to get you a sales and use tax permit. And that's how they'll do that. You're welcome. And then Christy has a question. I am an interior designer. I usually buy at a retail pricing and sometimes do a markup to help cover my time. Do I need a reseller permit? Do you need a sales permit? So you're buying furniture? Is that what you're doing? Rugs, pillows, that kind of thing? Okay, and then you're selling those back to the customer? Yep, yeah, you'll need a seller's permit. So you're actually making sales of tangible personal property. So you'll need to collect sales tax on those. And because you're collecting sales tax, you'll need the permit numbers to remit it back to the state. So if you need the permits, you're going to go to the IBR. Right, you're paying sales tax at purchase, but if you're selling tangible personal property and you're not a contractor, then you will need to collect sales tax from the sale to the end user, to your client. And because you're collecting that sales tax, you'll need to remit that back to the state. And because you're remitting it back to the state, you'll need to have the permit number so we know where it came from. And then Jeff has a question. Says, I don't have any permits, and how do I go about that? This is for mobile mechanics business. It'd be the same thing. Jeff, you would go to the Idaho Business Registration page. It's on tax.idaho.gov, and you'll look for the entry that says getting tax permits, and then you'll fill that out. I love this. Jeff, go ahead and make sure you send me an email at taxtraining@tax.idaho.gov, and I will send you the material. And so you can just look at it while you're going through it, so you know exactly where you're going, okay? That's that. But I'm paying sales tax purchase, got that. Nicole, oof, holy smokes. Hang on, people. I make and sell custom quilts. Excellent. Can I use the ST-101 for purchasing supplies? Yeah. Would I include this as a resale or a manufacturer? You're selling your quilt, so you would be I'd just do a resale, section 1. Oh, Mr. Horn has the daily question. What if you're a contractor? Idaho has some weird things about contractors, and that's why Mark is here. Can you explain the whole contractor thing, Mark?
Yeah. So contractors working in Idaho, you pay sales tax on everything you buy. That's the short answer to it. There's not if you're working in Idaho, there's not an exemption. You don't collect sales tax from your customers, but you pay sales tax on everything you buy.
So the way that I would do it as a contractor, knowing that I'm going to pay that 6% sales tax because I'm classified as the end user because I'm a contractor, I would factor that 6% into my bid so you can recover it that way. Because you can't charge your customer sales tax because you're the end user as far as we're concerned.
Right. What I used to do back in the day, I was a concrete contractor, and I would just, my invoice would say supplies, and then it would just have a number there. I didn't break it out into individual supplies. It just had one supply, and I included that sales tax that I paid in that. Now, you can't save sales tax anywhere on a contractor. If you do that, the customer can refuse to pay that.
Cool, thank you. So just a point, because I think some people got in a little late. You see where it says send to in the chat window? Make sure that that says all participants so that everybody can see what the question is. If you're sending it to just me or to host or something like that privately, I don't always see them. Let's see, Ray has a question. It says if the form showed 7/1 to 24 to 9/30 to 24, but I filled out my form as a quarter and not for those months only, I filed it as a quarter. Right, that form was just an example, right? So you're going to get a series of forms. If you're filing quarterly, it's going to be for, you know, quarter 1, quarter 2, quarter 3, and then the next one will be quarter 4, quarter 5, quarter 6, whatever, not 6, quarter 4, and then you start over again if you're filing quarterly. Some people will file quarterly, some people will file monthly. All depends on how they decide to set you up. But yeah, so your dates will vary. They'll always be on the same due dates, yeah, some people will have monthly ones, some people will have quarterly ones. We're still rolling. Okay. Okay. Suleiman has a question. I am running a landscape construction company. Do I need to include sales tax on products like rock, dirt, plants, trees, irrigation, those parts, that kind of stuff? Mr. Mark.
But by landscape contractor, do you mean The differentiation is made on if you're installing. So if you're a landscaper, then let's say you go get a yard of decorative rock and you take it to your customer's house and you do landscaping with that rock. You would pay sales tax when you buy the rock, and you would not charge your customer. Now, there are situations where a contractor may be a retailer, and I usually always use like a plumber. So if I'm a plumber and I go out and I install a faucet at your house, I'm a contractor. If you come to my shop and buy the faucet, put it in your truck and take it home and install yourself, at that point I'm a retailer and would collect the sales tax. Same thing with like rock for a landscaper. If they just come to your yard, pick up 2 yards of gravel, take it back to their house and do whatever they're going to do with it, you would collect sales tax on it.
These are great questions. Jeff, I just put the email into chat. And then Dana says, so as a contractor, how would you show that on the invoice? You don't put sales tax on the invoice, so what you'll do is when you do your bid, you'll just factor in that 6% into your bid for that job.
Right, so say your supplies were $100, after you paid sales tax, it was $106, you would put supplies $106, or whatever number you determine you need to put there.
Okay, and then Amanda, if I build and sell greenhouses, do I pay sales tax on that or no, because it's part of a contractor thing?
And greenhouses would be, it depends.
I mean, could they be classified as real property?
They could be if it's attached to the property, and it would be expected to be sold with the property.
So if you built a greenhouse where you poured a concrete foundation for it or concrete footers, once you installed it in the ground where it's permanent, then it becomes real property. I think that's right.
Right. Right. Where it wouldn't be as if it was, you know, I built this greenhouse, I take it down at the end of the year, and I throw it away, or it's not permanent, it doesn't disrupt the real property, it wouldn't be expected to be sold with the house. Those would be a little different.
So, and then Amanda, you said, if I build and sell greenhouses, do I pay sales tax on that? You would have the option, if you have a reseller's permit, using an ST101, or if it's real property, using the ST103C, of using that form to purchase the materials to build the greenhouses, and you wouldn't pay tax on it.
And, you know, something like this question with the greenhouses, I would like to have an email to know exactly how that's being done, the whole procedure, so I could research something like that just to make sure. Because that's going to be one that is going to depend greatly on exactly how it's working.
And this brings me to a point I usually get to later, but I'll do it right now. We're here to help you. We're not here to try and find things wrong. We're not here to try and take your truck and your dog. I know there's a lot of misinformation about what we actually do here. We're here to help you. So if you do have questions like this, you're like, man, should I be charging sales tax? I don't know what to do. Get a hold of us. We will gladly help you. We have 12 people on the phones who will answer calls from everywhere that has to do with Idaho sales tax. We have email. We have field offices. We have friendly people downstairs where you can walk in and ask questions there. So if you have any kinds of questions, please don't hesitate to just either pick up the phone or send us an email or come on down. We are happy to walk through it with you and figure out what it is. We can't always answer every question. We can't tell you what to put down for a payment or something like that. We can't give you tax advice, but we can tell you, as far as the state is concerned, what we mean by these things. Does that make sense? We are still rocking. I don't quite understand. We have an electrical contractor business. We do have supplies that we charge to customers for a project. We need to charge sales tax on those items. I'm just trying to understand. So you would, when you purchase them, you would either pay sales tax or use an exemption. But as a contractor, Idaho considers you as a contractor to be the end user. So you would not be charging sales tax to somebody else. Now, if you were, so let's say you're the most recent one. You're putting a 220-volt line because somebody is getting an electric car. So they need a 220-volt line run into the garage, and they need the socket, and they need all that stuff put in, right? So that's the job that you bid for, that they're paying you to do, that you're contracted to do. All of the equipment, all of the materials, so the lines, the cover, everything that you're using for that is going to be put under one job. So $1,000 for that. You're not going to charge $1,000 plus 6% sales tax because you're contracted to do this. Now, you may have paid sales tax for the electrical line, for the outlet, for the box, for all that stuff, but you're not going to charge sales tax to the person who contracted you to do it. What you would do is if you paid $100 for the materials and you paid taxes for it, so you actually paid $106, what you would do in your contract, you would say, okay, the materials are going to cost $106 because you're already factoring in the sales tax that you have to pay. The materials are going to be $106. The labor is going to be, quick math, $194 or $894. So the whole thing comes out to $1,000. That make sense? It can be super confusing when you're first trying to figure it out. Now, that being said, let's say you run an electrical business, you're doing a job, and then somebody says, hey, can I buy a breaker box from you? I don't know if you sell those, but you know, my breaker's gone out. I need a 5-amp breaker box. I know nothing about electricity, so I need a 5-amp breaker box. Can I buy one from you? And you're like, oh, here you go. Yeah, they're $20. Because now that's not part of a contract, but now you're a retailer, so you would charge sales tax for that because you didn't install it as part of a contract. It either makes sense or I've stunned everybody into silence. Okay, still going down the list. If you have a personal TAP account, can you use the same one for the business? Also, if you have more than one business, do you need a TAP account for each business? That is a fantastic question.
It just depends on how you want to run that. You could have just your personal TAP account, and there's a section in there that you can request access to other tax accounts. So potentially what you could have is your personal tax account, and let's say you have 4 businesses, you could actually request access to all of your business tax accounts and be able to access them in your individual account.
Yeah.
The kind of caveat to that is it requires a letter to be mailed to you with a registration code, and you would have to do that process for every tax account you had that you wanted access to from that account.
Yeah, my wife is the accountant for a company that has 33 sub-companies, so she has one TAP account. She would lose her mind if she had to do that for every one of them.
Well, and it just depends on I always feel like it depends on personality.
Yeah.
Because I'm more of a structured person, and I would go the other way.
Yeah.
I want each business to have their own tap login, so I wouldn't get confused putting numbers in. Because I would. I put my wrong numbers in the wrong account.
Yeah, yeah.
But other people, it works great for them.
Jason has a question. You guys are great with the questions. It's the most I've ever had, and I've been doing this for 3 years, so nice job. If I'm a new business owner, expecting 6 months to a year to begin, after all the permits have been gathered, when is one expected to start filing taxes for the business? When you get your first form. So I wouldn't fill out the IBR to get my permits until I'm maybe a month or two out. Because you're going to be filing $0 returns for a few months, especially if you're a year out. So I would typically wait to pull the trigger on the IBR until a month or two out. But if you get them early, let's say you get your form and the first one you're supposed to file is for March. And like, well, I'm not going to actually start my business until April, then file the March one just at zeros. Is an auto repair shop considered an end user? You're a retailer. So you wouldn't charge sales tax, because we just did the invoice, if you remember. You wouldn't charge sales tax on your labor, but all of the parts you are going to charge sales tax on. So you're technically not a contractor. Okay. Are you ever required or obligated to explain or list materials for a job when you list them as supplies for contractor work? What if the customer asks to see what the supplies used are? Can I say no? Or do I have to show where I included tax that I paid? I mean, as far as we're concerned, there's nothing that requires you to do that. I think it's probably good business practice to list it out. Transparency is a good idea. And if they ask, well, what is this? It's like, well, this is the sales tax that I had to pay for these. It's just factored into the price of the products. Or you could just break it out and add 6% to every product as the price for it. But yeah, as far as the state is concerned, there's nothing that says you have to do that. That was outstanding. Okay, let's go on. Let's fill out the 850 form here. Okay, so we're going to pull up the reporting, the accounting for the reporting period. We'll do that out of QuickBooks, out of Sage, whatever you have. They all work. And we're going to say, ooh, for this reporting period, we did $1,025 worth of total sales. So we put $1,025 in there. The next entry are going to be less non-taxable sales. So that means anything that we sold where we did not collect sales tax. So these would be things where somebody gave us an ST-101 or an ST-103C. For this reporting period, we had somebody buy $50 worth of product, and they gave us an ST-101 for it, so we did not charge them sales tax. We need to be able to account for that here so that we don't think, as a tax commission, that you collected sales tax for that. So we'll put in our $50, and then we're just going to do what it tells us to do. Take line 1 and minus line 2. So this is our new subtotal. The next line are items that are subject to use tax. Now, use tax, I'm going to greatly oversimplify this. Use tax is an object that you purchased that you should have been charged sales tax on, but you were not. In our instance, we bought $25 magazine subscription. Retail value was $25. They did not charge a sales tax on that, but it is tangible personal property, so they should have. So we're going to include it here. I'm sorry, Holly, I don't think I did. Let's see here. I'm sorry if I missed you. We had quite the run going on in there. I do not see your question in there, Holly. I'm sorry. You want to type it in again? If you do it to all participants, oh, here it is. Okay. If I'm offering services that are not tangible, such as coaching or counseling, do I need to acquire these permits? That is a great question. If you're not actually selling tangible personal property, when you fill out the IBR, it's going to ask you this. If you're not actually selling anything, you're just coaching, or you're just counseling, you're not providing anything material, no, you're probably not going to need one. That's a great question. Sorry you had to wait so long for an answer. Okay. So then we're going to add our subject to use tax, so things we should have paid sales tax on that we didn't. And then we're going to subtotal. So that's $1,000, which makes it very handy for math. So we're going to take our total taxable for that reporting period, which is $1,000, take 6% of that, which is $60. The next part of this is adjustments. You may also hear them called line 7s or line 7 adjustments. Adjustments occur when you sold a product, collected tax on it, and then after you filed your taxes, the customer returned the item, you refunded them their money, including the taxes, but now you've paid the tax to the state and you refunded it back to the customer. So this is where we allow you to claim that back. You'll need to give us some documentation of the transaction or that adjustment will be denied, okay? And you would need to attach paper explanations of it if you're filing by paper. You will need to attach digital copies of the stuff if you're doing it online. We'll make adjustments there. We don't have any for this time, so we'll carry forward. So we have our taxes due is still $60. Now the next two are penalty and interest. You may also hear these called P&I. If you file late, you may have penalty and interest applied. We suggest that you file the return without including any P&I and let us calculate it for you. Now, if we've told you that you have it, this is where you would include it. But if we haven't said anything yet, just we'll get to it. But it's not going to cost you anything more. It may actually save you money. We have a tendency to round down. Some of the calculators and spreadsheets that are out there have a tendency to round up. For our example, we don't have anything. Everything's been wonderful. So our total due for this reporting period is $60. So this is the $60 we should have collected from our customers as sales tax. So all we do for filing paper is we fill out this form, we put it in an envelope along with the check or money order or what have you, and then we mail it in. If you're doing it online, you would just put in your numbers and do your banking. And then you're done. Can I explain again line 3? So line 3 are your taxable sales after you take out any non-taxable sales that you made. Okay, so line 2. So line 2 are any sales that you made that you did not collect sales tax on. So for our examples, let's say somebody came in and they bought $50 worth of products from you, and they gave you an ST-101. So remember, the ST-101 says they are exempt from sales tax. So you took the ST-101, you charged them the $50 for the products, and you didn't charge them $53, because 6% of 50 would be $3. You didn't charge them $53, you charged them $50, so you didn't charge them sales tax. Now you're going to want to be able to put that on here because we're expecting that you would have collected sales tax on all your sales. So if you didn't, that is where you would put that. If you didn't collect sales tax for some reason on a sale, this is where you would put it. Yep. It seems really complicated the first couple of times you do it. And then after a while, you kind of get your reports dialed in as to how you want them put together in your accounting software. And then it's pretty easy. when I file my returns. Some of them are pretty complicated, just because I have a bunch of different clients who do all kinds of different things, and sometimes they're complicated. The first couple of times I filed, it was a couple hours. Now when I do it, I already kind of have an idea of what it is, so I just file them. That was a fantastic string of questions. Thank you. Where are we at? We're reporting our taxes online. This is my most favorite thing about the Idaho State Tax Commission. And there's a lot of stuff, but this is my most favorite. As a business owner, one of my things is that I don't have any time for anything. I'm always rushed. I'm always stressed. I have 500 things on my plate. I try to find a way to save time and make things more efficient any way that I can. I used to file by paper, and I am what is known as chaotically organized. You probably know people like this. My office is a mess, but I know where everything is. My wife, who I've been married to for 30 years, I love her dearly, she is organized. So what this means is she will organize the office. And that means when I go to file my stuff, I don't know where anything is because it's not where I left it. So when I was filing paper returns, I would remember, oh, I have to file this. This is due, usually the day of. So I'll pull my reports, I'll fill out my forms, and then I have to find an envelope, and I don't know where the envelopes are. And then I have to find a stamp. Like, oh, where are the stamps? And so now I'm like, I don't know where any of this is, and I don't have any time. So now I run to the post office to go buy stamps, and then I go to Walgreens, because it's right across the street, and I go buy envelopes, and then I go back to the house because I didn't have the foresight to bring the form with me because I'm right at the post office. I put all that stuff in there, and then I have to go back to the post office and make sure it's postmarked by the due date. Very stressful, and it was every single time I filed I had to do this. So I finally got a TAP account, and I do all of it online. So what I do now is I set a reminder, a reoccurring reminder on my phone that I have to do my taxes. And then when that thing goes off at 7 o'clock in the evening, I get up from whatever I'm doing, I go to the office, I fire up my laptop, I file my taxes, I'm done in 15 minutes, and I go back to doing whatever I was doing. TAP is a godsend for me. I still need to organize my office better, but in the meantime, it's called TAP, and I have it circled right here on the page. So it's Taxpayer Access Point. What you'll do, you need to create an account first if you want to use this. Yeah, TAP. And the first time you try to log in, you'll need to create an account. It does take a week or so to actually get all of the information so you can log in. But once you've done that, here's all the stuff you can do in here. You can e-file those returns we just talked about, the sales and use taxes. If you're subject to travel and convention taxes or auditory and district taxes, you can file those too. Same for withholding or IFTA or beer and wine taxes. All of those can be filed electronically. You can also make payments for all of those. You can also make payments for business income tax and individual income tax as well. You can't file individual income tax or business income tax, but you can make payments. You can also validate those permit numbers. So if your seller permit number, you can validate that. If you have a cigarette or a tobacco permit, you can validate those as well. Cigarette does not look correct. I'm going to have to look that up for some reason. Here's something you cannot do in TAP. We can't apply for a permit. To apply for a permit, we're going to have to go through the IBR. Remember the Idaho Business Registration? We can't amend a return through TAP, and you can't file income taxes. But everything else that we listed, you can do electronically from the ease and comfort of your own home. So I would recommend getting a TAP account. Like I said, for me, it was much less stress. I could go in, get it done, and get out and go work on something else. I don't have to stop everything that I'm doing to spend a couple hours figuring all this stuff out. Get a good accounting software, get a TAP account, get them set up correctly. All right, I'm going to talk a little bit about income taxes. So far, we've discussed topics that relate mostly to the Idaho State Tax Commission, so questions about those topics can be directed towards us. And I'm going to have our contact information at the end. There are a few items that are of importance to business owners that are from the IRS, so I'm going to go over this information. Woo, there's a big question just came in. Let's see. Okay, we sell and install generators. I understand that if we sell a generator outright, we should charge sales tax. But what if we install and sell the generator? Our accountant says that generators are home improvements and are subject to sales tax on the markup or retail price. But the materials used to install it would not be shown in the invoice. What do we need to show a separate line item for sales tax for generators, or is it all considered part of the install price? That is a fantastic question. And I am so glad that Mark is here.
Generators are another one that it depends greatly on exactly how it's going in, what it's going in on. There's various things. I mean, it can even be a situation where maybe the base that you put the generator on is an improvement to real property and the generator may not be. I'm not 100% sure. I want to know exactly how that whole process was going as far as the installation.
Yeah, what kind of generator it is.
Right, what kind of generator
is it actually going to be
about?
Like on a poured pad and bolted in? You know, are there lines that are running directly to it? There's all kinds of different things that we have to figure out to get you the accurate answer.
Right.
So we're not trying to be flippant, but sometimes it is. We need more info to make sure we give you an accurate answer to that stuff. I would trust your accountant for the most part. They've seen a lot of this. But if you do have questions, yeah, give us a call or come on in, and we can walk through it and figure it out with you. Thank you for that question, though. And then Christy, what accounting software do I recommend? I cannot recommend one. I have used all of the major ones. I'm not going to spend, $13,000 on one, but all of the normal ones, like I said, QuickBooks. What are some of the other ones that are out there? Sage. I'm trying to remember. I've been doing this a while. All of the ones that are like normal size business, not the huge, giant, complex ones, have all worked fine. I know QuickBooks Online is really popular. I've done that one before. I purchased QuickBooks and it's a trap. Okay, I have to be very careful about what I say about businesses. I haven't had any issues, but I know that people find things that are it's very hard to get away from certain things. Yeah, there you go. Thanks, Nicole. Thanks for saving me. And since this is recorded, I really have to be careful. Okay, income tax. There's a few items of importance about that business owners need to know about that are from the IRS. I don't want you to be surprised, so we're going to go over these real quick, okay? Because I'm over time. Okay. First thing, there's something called self-employment tax. Self-employment tax includes FICA, Social Security, and Medicare. You have to pay this on your own if you're self-employed. Even if you're starting a business as a side business like mine is, this has to be paid. Usually when you're employed by somebody else, these are split between the employer and the employee. But as a self-employed person, you have to pay the full percentage. We recommend 15.3% of your net profit be set aside for this. Now, this is often paid quarterly along with your estimated federal taxes, and this is, again, through the IRS, not through Idaho. So if you do need more information about this, please contact the IRS, and you can do that at irs.gov. This is basically the same info on a prettier slide. It's called payroll tax. It is due on a first dollar profit for sole proprietor. There's no standard deduction. It isn't the same as your income tax, but you're going to report and pay your payroll tax with your federal taxes. Okay, let's talk about saving money. I like talking about this stuff. So the IRS states that all deductible business expenses must be incurred in connection with your trade, your business, or profession. It has to be ordinary, and it has to be necessary, and it must not be lavish or extravagant under the circumstances. That's it. Now, sole proprietors generally complete a Form 1040 Schedule C to report their deductions. If you're doing a different setup, you may have a different form. It may look the same, but you may have different entries. So, Mariel, what happens if we don't make any money in the beginning? Yep, just file $0 returns for that reporting period. Yeah, don't ignore them. Just file $0 returns. That's fine. Happens a lot. I do it all the time. So for sole proprietor, this is what it looks like. Hang on. Okay. To the IRS, right? Do you file for the IRS? I'm trying to remember what I do with the IRS. I do estimated federal taxes. I'm trying to remember what my accountant said. My accountant being my wife. What do I do? Honestly, Mariel, I don't remember what I do for IRS. It is not a big deal for me. So I think it's estimated federal taxes, and they're usually zeros. Okay. You can tell that my accountant does that. Okay. Form 1040 Schedule C. Here's a list of deductions on this thing. If it's one that's appropriate for your business, this is what it's going to look like. Other forms have similar layout, but they may have different line items. Research these. Here you go. Perfect. Research these and figure out how you can use them. These can save you some money, and we all want to do that. So if you have car and truck expenses that you can legitimately claim, go ahead and claim them. But I want you to do some research to make sure that you can legitimately claim them. Don't just start putting stuff in here and think you can get away with it, because they will figure it out eventually. An example I like to use, I'm going to do it quickly because I'm running out of time and I don't want to take up Dawn's time. Let's say you've listened to Dawn and you've listened to Shannon from the Small Business Administration, and so you've really been thinking about how you can differentiate yourself from the other businesses in your area, right? Because that's all what we're all trying to do. And you're like, okay, I have a cupcake shop, right? I bake cupcakes, I sell them to people, that's what I do. I'm very good at it. But there are 3 others in my general area. How can I differentiate myself from those 3 others? We all do about the same quality, we all have about the same price point, we're all around the same price. What can I do to have people buy from me and not buy from them? So you start thinking about this, you're like, delivery. I can deliver cupcakes. It's like Domino's, only cupcakes. This would be perfect. Okay, what else? What else? I could deliver cupcakes in a Lamborghini. I could buy a Lamborghini for my business and use it as a deductible business expense because there's none, line 9, car and truck expenses. I can buy a Lamborghini for my cupcake business and be the fastest delivery in the valley. Sweet. Remember the first part, it can't be lavish or extravagant under the circumstances. While I think it's a fantastic idea, I'm pretty confident that the IRS would not. So think like that, figure out what you can do, but then check and make sure that it's stuff that you can do legitimately, because I don't want you to get in trouble by pushing boundaries, okay? I still think that would be cool, though. Can you imagine rolling up to a birthday party in a Lamborghini with a bunch of cupcakes? You'd be a hero. Okay, I digress. Let's talk about record keeping. There's some records that you want to keep for 4 years. So these would be things like receipts, check registers, invoices, tax returns. Now, remember in the very beginning, I said organization is your key to survival and a long life and not many migraines. This doesn't mean you have to keep paper records. If you have digital copies of stuff, that'll work just fine. I have a little digital scanner for all of my receipts. So if I buy stuff for my business, I scan the receipt, and then I have a digital copy of that, and then I keep them in files, in digital files on my computer. That being said, I also back up those files to a separate hard drive, because if something happens to the office, I don't want to lose all my info, or if my laptop dies, I don't want to lose all my info. So I back everything up to an external hard drive, and I have that hard drive in a different place. I actually have it in a fireproof safe. But these are the things you got to think about to preserve your data integrity. There are some records you're going to keep for more than 4 years. Any contracts I would keep until 4 years after the close of that contract. Those exemption certificates that we talked about, so the ST101s, the ST103Cs, keep them until they're revoked. They don't expire, so I'd keep them until the person says, yeah, I don't need that anymore, or if you reach out to them and make sure. Okay. There are a lot of ways to get a hold of us. We're on Facebook. We are on Twitter. It will always be Twitter. We're on Instagram for some reason. We're on LinkedIn. We actually have job postings out on LinkedIn. And then we are on YouTube. So I actually have a YouTube channel out there. It's Idaho State Tax, where I will post things like this recording once I'm done with it. I will post that. We also post 1 hour lunch and learns about tax implications for retirees, tips for filing this year, that sort of thing. So there's quite a few of them out there on the YouTube channel. We also have 2 different newsletters. You can subscribe to those at Get News off of tax.idaho.gov. I've done it. I think I get one like once a month, so they don't spam you with 10 of these things a day. And they're usually just newsletters about tax changes, tax code changes, things that might come up. So it's actually super good information. And then we have people. This is not one of them, but we do have people. We have our phone number here in Boise. It's 208-334-7660. Also toll free at 1-800-972-7660. Or our website, which we've gone through, tax.idaho.gov. And we have a fax machine, so 208-334-7846. You'll say, well, yeah, but what if I want to email you? If you go to tax.idaho.gov, you'll see where I have this circle. This is Contact Us. If you click on Contact Us, it will take you to this page. On this page, the top part of it are self-help tools, where you can click. So if you want to check your refund status, you can go straight to it by clicking there. We have a bunch of those. If you look to the left, the second one down, you'll see office locations and hours. We have field offices throughout the state of Idaho. So we have one in Coeur d'Alene, we have one in Lewiston, we have one here, obviously on Chinden. We have one in Twin Falls, we have one in Pocatello, and we have one in Idaho Falls. So if you're in any of those areas, you can always stop by and ask some questions or get forms if you lose it. Super easy. But click there and double check, because they don't always have the same hours. Okay? And then from here, if you scroll down, where it says submit a question, this is how you email us. You just click on the box that pertains to your question. So if you have a question about TAP, click where it says TAP issues. It'll open up a dialog box. Type in your information, type in your question, be as thorough as you can, and then send it. What it'll do is it will send that email to the people who handled those questions. So it doesn't go to a big giant box and Mark has to filter through all of it. It goes to people who handle that question periodically. There you go. And then the last part of that page is our address here, and then our hours and our phone number again. Any more questions? You guys have been fantastic with the questions. Okay, let's do this. Let's take 4 minutes. Donna, I'm so sorry I went over that far. Let's take 4 minutes. We'll be back at 10:20 with Don Baltaduns from the Taxpayer Advocate Service. Okay, so we'll get some coffee and bring the questions. I'll see you in 4. Thanks. All right, welcome back, everybody. Let's get Dawn the magic presenter ball. Bum, bum, bum. Hey, Dawn.
Let's see, did I do that right? Can you hear me now?
Yes, ma'am.
Okay. Just going to click happy here. Thanks, Steve. Okay. So, hi, everyone. Welcome and thank you for coming. I am Dawn Baltadonis. I represent the IRS Taxpayer Advocate Service, TAS for short. I am the local taxpayer advocate here in Idaho. I am going to discuss who we are, what we can do to help you if you need assistance with federal tax matters. I'll also cover a couple of helpful hints to help you understand and hopefully be helpful as you start, grow, or continue your business. I am hitting the... Sorry, I'm going to get it. Not enough coffee. So I do hope that you hang on or save the presentation, my presentation, as well as Steve's and the SBA presentations for future resources. This one lists our local phone number. Yes, we still use fax, or our fax number. We do have an email address and my local phone number. We're located here in Boise, but we serve all of the state of Idaho. So a little bit about who we are. So we are an independent organization within the IRS. TAS provides free service to all eligible taxpayers. Our free service includes or is available to individuals, authorized representatives, businesses, exempt organizations. There are no income limitations for assistance. We do all of this and we take our responsibilities very seriously. And I'll discuss kind of how we do these things through what we call case advocacy. And by working directly with the IRS for some administrative changes and Congress for legislative recommendations, which I'm excited to bring you today. TAS is required to have at least one local taxpayer advocate in each state. We do have more than one office in the bigger states, California, Texas, New York, Florida, for instance. And we do sometimes work cases in different states, but I'll explain that a little bit. So a little bit more about what we do. We protect your rights by striving to ensure that you as a taxpayer are treated fairly and understand your rights as outlined in the Taxpayer Bill of Rights, and I'll go over that in the next slide. To the extent possible, we propose changes in the administrative practices of the IRS to prevent problems. We see a problem, we try to provide a solution to the IRS. We identify legislative changes. We do that every year. We help taxpayers where a system has failed to operate as it was intended or efforts have failed to resolve the problem with the IRS systemically. If somebody qualifies for TAS help, we'll be with you at every turn and do everything possible to assist you. Again, we consider ourselves your voice at the IRS. And then, next slide is the Taxpayer Bill of Rights. And this, I know the state has their own Bill of Rights based on this, but it's always worth repeating. So the Internal Revenue Code, or IRC, provides us taxpayers with specific rights. Our NTA, our previous NTA, got these codified into law, and all IRS employees are now responsible for being familiar with and following these rights. The 10 rights are the right to be informed, the right to quality service, the right to pay no more than the correct amount of tax, the right to challenge the IRS's position and be heard, the right to appeal an IRS decision in an independent forum, right to finality, the right to privacy, the right to confidentiality, the right to retain representation, and the right to a fair and just tax system. Each right is further defined. Just for an example, the right to be informed states that taxpayers have the right to know what they need to do to comply with tax laws. They're entitled to clear explanations of the laws in IRS procedures and all tax forms, instructions, publications, notices, and correspondence. They have the right to be informed of IRS decisions about their tax accounts and receive clear explanations of outcomes. So the IRS is working on a major project to kind of plain language all of their notices and instructions and publications. It's an ongoing process, but things are getting better. But bottom line, know that you do, and if you have clients, you have rights when dealing with the IRS, and TAS consistently works on behalf of all taxpayers to ensure that those rights are respected. So, and this one, I normally cut it short, but I'm going to kind of go teeny long on just this particular slide, because this year is a real first. So, statutorily, by law, the NTA, or National Taxpayer Advocate, is required to submit 2 reports to Congress each year. An annual report that's due in December, it just came out a couple of weeks ago, and an objectives report that's due in June. So she delivers these reports to the Senate Committee on Finance and House Committee on Ways and Means with no prior review or comment from the IRS Commissioner, Oversight Board, Secretary, Treasury, or any other officer or employee. So the annual report includes an analysis of the 10 most serious problems encountered by taxpayers, as well as legislative and administrative recommendations for solving those problems. It also discusses the 10 most frequently litigated federal tax issues from last year. So the latest report to Congress credits the IRS with substantially improving taxpayer services, but still identifies where paper processing is a continued area of weakness. They're making improvements, but not as much as they should. So as part of that, our report, the NTA's Purple Book, is a compilation of 67 legislative recommendations designed to strengthen taxpayer rights and improve tax administration. You can find these, the Purple Book and the whole ARC report on our website. But the exciting part is, so on January 30th of this year, Idaho Senator Crapo, along with Senator Wyden of Oregon, drafted or published their draft of potential legislation that contains 40 of the NTA's legislative recommendations. Among them, the ability to sanction bad tax preparers. I'm super excited about this. Let me read this. It says, the jointly released discussion draft of broad and sweeping bill titled the Taxpayer Assistance in Service, or TAS Act. It runs 163 pages, contains 68 provisions, and about 40 of which reflect recommendations from the National Taxpayer Advocate. So coming directly from us. The summaries, and like I said, you can find them on the Purple Book and on our website, but they have 10 titles, including Improving Tax Administration and Customer Service, Creating Fairness and Simplification for Millions of U.S. Taxpayers Living Abroad and in the States, Streamlining Judicial Reviews of Adverse IRS Determinations in Several Ways, Strengthening the Independence of our Office of the Taxpayer Advocate, authorizing, and this is exciting, authorizing the Treasury Department to establish minimum standards for tax return preparers. There's too many fraudulent tax preparers out there. Strengthening taxpayer rights before the Office of Appeals. Setting forth rules relating to some whistleblowers. Providing filing and payment relief for taxpayers held hostage abroad who missed deadlines. Providing administrative relief for small businesses, so well worth reading, and then certain other miscellaneous changes. But this is huge. We go to Congress every single year and we ask them to look through the legislative recommendations. But again, Idaho Senator Crapo and Senator Wyden of Oregon have drafted some really profound legislative bill, and hopefully it goes through this year. Our objectives report in June is just really describing our activities planned for the upcoming fiscal year. So that'll come out in July. And so switching topics a little bit. So how can we help small businesses and self-employed? We want to help you meet your filing requirements, share resources for information and tax return preparation, help you file accurate returns so that you really never need TAS help, but know that we're there if you do. So it's a vast topic, and I really could talk for days on many aspects, but I'm going to limit my focus to key areas every self-employed or small business should know, and to which TAS has seen many small business owners fall victim to. Record keeping, I'm going to emphasize some of the points that Steve made, but the importance of proper record keeping. Well, I'm not going to talk about the classification of workers and employment taxes. I've left those two out, and I should have revamped the slide. Sorry, Steve, I'll do that afterwards. And we'll discuss considerations when selecting a tax professional. Which forms to file? So there are different types of small businesses that are required to file different forms with the IRS and responsible for paying different types of taxes. Most self-employed individuals start out as sole proprietors, filing on a Schedule C on their Form 1040. You'll pay self-employment tax, as Steve stated earlier. You may need to pay quarterly estimated taxes as well as employment taxes should you hire and pay employees. Some other types of business structures include the partnership, C Corp, S Corp. There are other entity types, LLCs, joint ventures, etc., to consider if you're just setting up your business. And I'll have a couple of slides of IRS resources that may be helpful to you coming up in just a couple minutes. So the importance of good record keeping. As a small business, you may have different types of returns that are due and many different types of deductions based on your type of business. As a busy small business owner, putting a user-friendly, less time-consuming system in place sooner rather than later will help you save time and money in the future. You may need to substantiate income and deductions. Good records can assist you in preparing financial records, keeping track of property and deductions, and so much more. Good records can also assist you in knowing exactly where to target funding and reduce expenditures to optimize profits. And Mario, does an LLC file as a sole proprietor? It depends. It depends on how you set it up at the federal level. I think the LLCs are not considered a federal entity. So in some situations you can, but there are some that are considered either S Corps or partnerships too. So it depends on your facts and circumstances of your business. So record keeping systems for small businesses. For the IRS, you may use any type of system that works for you and your business to maintain proper records of your income and expenses. In a few rare instances, the law does dictate the type of record-keeping system you put in place. Consider utilizing resources such as other small business owners, accountants. We have low-income tax clinics if you qualify. A small business administration is a wealth of resources for recommendations on specific systems. A good system for a small business will require a little training and allow you to quickly scan and catalog expenses and receipts in the proper categories. Many accountant firms offer administrative assistance to train and make recommendations to office staff in small businesses. Again, SBA has a SCORE mentor program that is fabulous. But consider the time or staffing that you have to devote to this. A good system or hiring a service to compile records may save you time and money later. You may be a good carpenter, but not so much a good accountant, like Steve said, for himself. A good system and a good accountant will still need oversight from you and assist you in understanding where your largest revenue streams and expenses are coming from. It's a good way to know if a product or service is valuable, assist you in maximizing your business potential. You should review income and expenditures routinely and reconcile any items necessary at that time. Don't wait for tax time to do this. So what types of records should be maintained? Steve, did you need something?
Yeah, I'm sorry I threw you off. It looked like there was a question in there.
I did one about the LLCs filing as a sole prop. Like I said, for the most part, but there are definite exceptions, and you need to know about them. And same with joint ventures. There are specific rules. Again, the resources that I provide in the next couple of slides, and the IRS.gov has just a wealth of information on how to set up yourself as a business entity and what types there are for you to look at if you're just starting out. Okay. And I forgot where I was. What types of records should be maintained? So, Purchases, sales, payroll, other transactions you have in your business generate supporting documentation. These records contain items you must report in your books, and the supporting documentation should be maintained in an accurate, easy-to-access filing system that works for you and your business with the level of staffing that you have. Some common examples of records to keep include receipts by date, with what they're for, bills with the name of who you paid, how much you paid, the service. Some can also be used to verify mileage, canceled checks, grouped with bills and reimbursement if applicable, legal documents with descriptions, loan agreements with terms, logs or diaries, medical, dental records, thus lost documents, property records, employment documents, Schedule K-1, and any other applicable documents. But you need business records, or you need records to support the purchases, sales, payroll, other transactions generated from your business. Support for business deductions should be kept on a routine basis, generally daily, but at least weekly. Should provide adequate information that shows an exact amount of income or expense. They can be kept electronically or in written format, or both. Should be overseen or accessible to at least one other person for purposes of continuity. It should be based on invoices, receipts, account statements, and other business papers. Should be organized again for easy retrieval. In the absence of adequate books and records to reflect income and expenses, bank statements, canceled checks may be used to reconstruct income, should it come to that. But the best opportunity to report income and expenses is when your tax return based on good supporting documents is timely filed. So we'll go over gross receipts. So gross receipts are the income that you receive from your business. You should keep supporting documents that show the amounts and sources of the gross receipts. These gross receipts include cash register tapes, bank deposit slips, receipt books, invoices, credit card charge slips, Forms 1099 miscellaneous, Forms 1099 NEC, non-employee compensation. TAS tips regarding gross receipts. Keep gross receipts in a separate bank account from your personal bank account. Do not commingle business and personal funds. It is expected that you pay yourself a salary. Consider writing a check to pay yourself and then deposit it into your personal account to keep the accurate separate records. Categorize documents electronically with a paper backup in specific categories. Some people use folders or envelopes, a good method, to be able to verify and access them later. So, inventory. Not all businesses have inventory. Some perform personal services, but inventory is any item that you buy and resell to customers. If you're a manufacturer or producer, this includes the cost of all raw materials, parts purchased for manufacture into the finished products. Your supporting documents should show the amount paid and that the amount was for inventory. Documents reporting the cost of inventory include the canceled checks, cash register receipt tapes, credit card sales slips, invoices. These records help you determine the value of your inventory at the end of the year. There's a federal publication, again, available on irs.gov, 538, Accounting Periods and Methods, for more detailed information on methods for valuing inventory. Our tip for inventory is it's best not to use business inventory for personal purposes. However, it does happen. And if you use business inventory, then keep very good records of the inventory that you use personally. And we'll talk about that next. So, merchandise withdrawn for sale. If you withdraw or use merchandise for your personal or family use, you must exclude this cost from the total amount of merchandise that you bought for sale. You can do this by crediting the purchases or sales account with the actual cost of the merchandise that you withdraw for personal use. You must also charge the amount to a drawing account. And the drawing account is just a separate account that you should keep to record the business income that you withdraw to pay for personal or family expenses. You also use it to record withdrawals of merchandise for personal or family use. It can be known as a withdrawals account or personal account or drawing account, whatever you prefer. So, a little bit about expenses. So, expenses are the costs you incur other than the cost of inventory to carry on your business. Your supporting documents should show the amount paid and that the amount was for a business expense. Again, documents can include canceled checks, cash register receipt tapes, account statements, credit card sales slips, invoices, petty cash slips for small cash payments. And again, some more TAS tips. Do not pay personal expenses with business gross receipts. Pay personal expenses from your personal bank account. There are tax return line items that may be legitimate business expenses. However, they could be questioned by the IRS during an exam. These include large purchases like Steve's Lamborghini and not much income reported, items that do not appear to be related to the business, larger utility bills with the home office deduction, paying family members, paying expenses for family members. Some items not reflected on your income may still be questioned. Having basic living expenses greater than the income you've reported, rent, mortgage, utilities, groceries, car note, etc. You've reported, a couple $100 and your expenses are, $2,500 or something. Other leisure expenses greater than the income reported, clothes, jewelry, memberships, box seats, vacations, that Lamborghini that Steve talked about. Excuse me. So how long to keep records? So this is federal. It's slightly different than the state, but as a general rule, the assessment statute for tax that you owe is generally 3 years from the date that you file the return, or the due date if you do not file. The assessment statute, federal again, for tax on income if you do not report is 6 years if it's more than 25% of the gross income shown on a return or attributable to foreign financial assets is more than $5,000. If someone fails to file, and the IRS may file what's known as a substitute for return, based on records, and they're probably limited, that it has. The return refund statute is 3 years from the due date of the return or 2 years from the date that you paid the tax, whichever is later. There is an exception for bad debt deductions. So the period for filing a claim for a bad debt deduction is 7 years from when the return was due. But for this reason, the general rule of thumb is to retain records for at least 6 years. We'll get to the burden of proof. The responsibility to substantiate entries, deductions, statements made on your tax return is known as the burden of proof. You must be able to prove certain elements of expenses to deduct them. A lack of knowledge will not be an excuse if you're called to substantiate income, expenses, or credits during an exam. The IRS and courts consider deductions a legislative grace. Some deductions are the result of expenses incurred by a business reported to the IRS on tax returns, both personal and business. The taxpayer may be required to prove that they are entitled to a deduction. In an audit or exam, the IRS determination is presumed correct if there are no clear supporting records. If a taxpayer contests an IRS determination of income and expenses, the taxpayer must prove that it's incorrect. The burden of proof is on them. Always be aware of which deductions are allowable and which ones are not. These deductions, unfortunately, may change from year to year and with each Congress. The most reliable source of deductibility of expenses is through a CPA, attorney, or enrolled agent, as these individuals are required to keep abreast of any changes in tax laws. Be certain that all your deductions can be supported before you sign your tax return. So some more record-keeping tips. Keep gross receipts in a separate bank account from your personal bank account. It's best not to use business inventory for personal purposes, but it does happen. Just calculate it and record it. Do not pay personal expenses with business gross receipts. Pay personal expenses from your personal bank account. For corporations, it's expected that you pay yourself a salary. So write a check from your business account and deposit it into your personal account. So Mariel, you had can you pay your expenses with savings and not generate income the first month? How do you claim that as an expense? So you're gonna show probably a loss. I mean, a lot of businesses start out in the red. So you're still going to list all of your expenses, and whatever that calculates up to, you may have to show your loss. and you should show your loss. It's, again, some businesses are lucky enough to show a profit that first year or first couple of years, but generally we see a lot of losses. As long as you can substantiate those records and say this was a legitimate expense for this, then you're not going to have any problem. Again, goes back to your supporting documentation. But you're not alone. Okay, so some people select tax professionals and some people don't. These are just tips in case you do. There are various types of tax return preparers, including the certified public accountants, enrolled agents, attorneys, many others who don't have professional credentials. You really expect your preparer to be skilled in tax return prep or preparation and to accurately file your income tax return. You trust him or her with your most personal information. They know about your marriage, your income, your children, your Social Security numbers, EIN numbers, all the details of your financial life. Most tax return preparers provide outstanding professional tax service. However, every year, some taxpayers are hurt financially because they chose the wrong tax return preparer. So we always say, check the preparer's qualifications, check the preparer's history, ask about service fees, ask to e-file. Make sure the preparer is available, not just during the tax season, but off season as well, in case of return, your return stops. Provides you records and receipts. I think I have some, I do have some more tips on this. So, never sign a blank tax return. Review your return before signing it. If it takes you, 20, 30 minutes to do that and ask all the questions, go for it. This is your tax return. Review the details about any refund, including verifying your bank account information on that return before it's submitted. Ensure your preparer signs and includes their preparer taxpayer identification number or PTIN number. So, excuse me. We do have, there's a lot of information right now about different scams and stuff, but there's tips and there's also a database on the irs.gov website, but there's tips to help people choose a reputable tax preparer, and then be aware of those ghost preparers. They don't sign the returns. They seem a little, as my kids would say, sketch or suspect. Trust your guts and trust your instincts. Ask those questions. Again, at this point in time, if something's wrong on your return and you have a preparer, it's still your responsibility, not the preparer's responsibility, for every item on that return. Again, be cautious. Okay, so the next couple of slides are resources, really good resources that I suggest that you kind of go out to the irs.gov website, do the search feature, and bookmark them, especially the ones that are that you'll use most frequently. These are just a small list of the most popular ones. Your rights as a taxpayer, as I talked about in an earlier slide. Pub 17, your federal income tax guide, that comes out every year, and that's kind of a Bible to both the state and federal level of all the changes. Pub 334, Guide for Small Businesses. This specifically lists the Schedule Cs. 542 for S Corp and corporations. 583, starting a business and keeping records. The gig economy in your taxes is for people who, are doing Uber Eats, DoorDash, little gig businesses. They should be keeping records of expenses and income that they get. But these can all be found on the irs.gov website. Oh, if you are or if you have or are considering hiring employees, Pub 15, Employer's Tax Guide, I should have listed it, and Pub 15A are well worth reading and bookmarking or saving to your favorites. So this is another, these are the links, and I don't know if they're active. Steve could probably tell you. They were when I created the presentation. So, but web pages to definitely include in your online favorites. There are also links to the Small Business Administration's website where there are additional resources, but they have the businesses. The easiest way that I tell everyone is just go to irs.gov. In the search in the upper right-hand corner, type self-employed or type small businesses, and you'll get to that small business centers. And then there's separate pages and specific information for self-employed individuals. There's now a small business virtual tax workshop. I know they're in the process of updating some of these links, but the information is usually available 24/7. There's an online tax calendar. I think that they have just updated that as well. But these will be again, bookmarks and favorites that you're going to go back to. Doesn't matter if you're a new business or well-established. So I'm going to switch. My last few slides are going to be a little bit more information about TAS and a couple of programs that we sponsor and recommend in certain circumstances. Oops, does someone have a question? No? Okay. So I'm going to talk about when to contact TAS. So in general, somebody should contact TAS when they're experiencing some financial difficulty, emergency, hardship. IRS needs to move much faster than it can or even can under normal procedures. In those cases, time is of the essence. So if the IRS doesn't act quickly, for example, to remove a levy or release a lien, somebody may experience even more financial harm or injury. This includes, again, all types of taxpayers, businesses, individuals. There are many different IRS units and steps involved, and the case needs kind of a coordinator or a traffic cop to make sure that everyone does their part. Well, TAS plays that role. Someone has tried to resolve a problem through normal IRS channels, but those channels have broken down. We saw that so much during COVID. A system or procedure has either failed to operate as it was intended or failed to resolve the problem or dispute with the IRS. I'll tell you about a new tool that will help you determine if you're eligible on the next slide. But always review our taxpayeradvocate.irs.gov webpage and see if there's any new case criteria guidance. Sometimes the IRS procedures and policies, especially during filing season, change frequently. So always check well, I've got the next page. So how to contact us for TAS help. Again, we should be keeping our website and pages up to date too. So you can go to our website. There is an eligibility tool that, can TAS help me with my tax issue? You're going to answer a few questions, and it's going to either lead you to publications or forms that you need or IRS help, or it's going to say, yes, at this point in time, you do meet TAS criteria, and it's going to go to a contact page which lists the United States, and each state lists our local office, our fax line, our email address. You can download the Form 911 request for taxpayer service assistance. Unfortunately, you can't submit it online yet. Still a work in progress. So you would have to either mail it in, fax it in, email it in if you feel comfortable, and get it to us. Or you can go back to the second or third slide where if you're in Idaho, you can call us. Generally, our intake line, she is usually very busy right now, so you may have to leave a message, and she will usually call you back within 1 to 2 days. I would note if you or someone you know has a tax issue and they haven't been able to resolve it, and you qualify for TAS help, I recommend providing copies of information that you either sent to the IRS or received from the IRS with the Form 911. There are many different computer systems in the IRS, and we don't always have ready access to those documents. So that saves a lot, usually saves a lot of time. So what to expect? As I mentioned earlier, our mission is to advocate on taxpayers' behalf. So we'll advocate with you on your behalf, be your voice at the IRS. Generally, we're going to assign a case advocate, and you'll be contacted within 7 days based on the urgency or hardship, and sometimes based on the amount of cases that we're getting in. You'll be given the name and contact information for the case advocate. They're going to be your point of contact until the matter is resolved. When they contact you, they'll attempt to clarify the issue, give you an estimated date of completion based on the normal time that it takes the IRS to resolve similar issues. And they'll request documentation. Like I said, if we have the documentation up front, that just saves that step. If we do request more documentation from you, but you don't respond to us, we'll make a second request. Then if you don't respond to that, we may have to close it, and you may have to deal with the IRS. Sometimes we have to have that documentation. But throughout the case, you can expect to be contacted every 45 days or sooner. We'll inform you of any expected next contact dates. We usually work cases by geographic locations, like Idaho works all Idaho cases, but we've also helped out Oregon and Colorado in some cases. We've had, when we had a staff shortage, that other TAS offices help us out. So we just want to make sure that inventory is spread as evenly as possible, and so your case is worked timely. We'll address all the actions taken, outcomes, resulting balances due, or refunds that you're going to be issued. We'll discuss any avenues of appeal before closing the inquiry, and educate you on the cause and how to prevent future problems if needed. Sometimes TAS, we won't have the authority to take the action that you're requesting, so we're going to ask the IRS to take that action. We have a couple of tools. One's an operation assistance request, and the other one is called a taxpayer assistance order. That one directs the IRS to function or cease an action, take an action as permitted by law, or refrain from taking an action when a taxpayer is suffering a significant hardship as a result or the manner in which the IRS laws are being administered. So the role, again, of the Taxpayer Advocate Service is not to request that the IRS break a law or disregard procedures. You know, a lot of people, tax law is complex. So there's sometimes some gray areas and things that need to be clarified. We're going to try to give you the straight, honest scoop. So the last two slides, okay, our other TAS programs. So our low-income taxpayer clinics, they represent low-income individuals who have a tax dispute with the IRS and provide education outreach to individuals who speak English as a second language. Their services are free or no more than a nominal fee. They are sponsored by TAS, but they are independent of the IRS and of TAS. They are outside businesses and clinics. So they can represent taxpayers in audits, appeals, tax collection disputes before the IRS and in court. So they have, if you have worked with one, a little more reach sometimes than we do. We can't represent somebody in tax court, for instance. So they, again, can provide information about taxpayer rights and responsibilities in the different languages. I have the link on the slide for the nearest LITCs, but we're blessed enough to have two of them here in Idaho. We have Bob Wonderly. He's the director of La Posada out in Twin Falls. And then we have Director John Hinton at the University of Idaho Law Tax Clinic here in downtown Boise. His tax students work these clinics. So it's been really, really awesome. Another TAS program, I always say that people who love taxes or even don't love taxes but have a lot of ideas on how to improve things, where they see something, hey, that doesn't look right, or that's not clear enough, or hey, I have a suggestion here about taxes, definitely tell them to go to our Taxpayer Advocate Panel site, theimproveirs.org. You have a submission, online submission. They have one that you can share your thoughts and concerns and suggestions and recommendations right there online. They also, you have an opportunity to provide that direct input through the TAP. They are also independent panels, citizen volunteers outside of the IRS, listen to taxpayers, identify issues, make suggestions for improving IRS service and customer satisfaction. So we encourage everyone, speak up, contact TAP to share those comments and concerns. If you want to be a TAP volunteer, around March, April, they look for new members. So if you're interested, keep your eyes open. The recruitment messages are on the TAS's website, TAP website, general media, social media, USA Jobs too. Let's see. If you do become a TAP member, you serve a 3-year term. It's a voluntary. Somebody must be a U.S. citizen, be current with his or her federal tax obligations, and able to commit 200 to 300 years during that time frame, and pass a background check, because they do have a limited access to some sensitive information, not taxpayer information. But I will say that over the last few years, they have the recommendations, I think it's 2,039 recommendations as of the end of last year, that have been implemented through the use of this TAP panel. And then, boom, I'm done. So here is our social media channels. We are, again, on, I know it's a little bird, but we're on X, the NTA's blog. I will definitely, that gives the information about Senator Crapo and Senator Wyden's current legislation. Definitely encourage you to read that. It's super exciting. These things they should have been done years ago, but it's glad to see that they're starting that journey to become into law. But I am about done, and I will turn it over to Shannon and Steve, and thank you very much for listening today. I hope you all have a wonderful afternoon.
Thanks, Dawn. Yeah, any more questions for Dawn? Now y'all get shy. Okay.
Oh, I did see Mariel has one. Income tax from a small business is your personal income tax. Depends on how you're set up. CPA would file both at the same time. Yes, they should, and it depends. It depends on how you set yourself up as an entity, a business entity, and that would be more information that you can get on the irs.gov website. Hopefully that's helpful. Thanks, I'm done.
Okay, let's do another 4 minutes. Grab some coffee, do whatever you need to do for 4 minutes, and then we'll be back with Shannon Madsen from the Small Business Administration, okay? Thank you. Okay, we are back. Just a reminder, if you haven't sent an email and you would like the material, please send me an email at taxtraining@tax.idaho.gov, and I will send that to you in a PDF format, which is what I'm going to be doing as soon as Shannon starts presenting. So fear not if you haven't gotten it. I'm getting there. And with that, I'm going to present Shannon Madsen from the Small Business Administration with some fantastic information for you. And let me get the presenter ball to you. There you go.
Perfect. Can everybody hear me?
Yep.
All right. Like Steve said, I am Shannon Madsen with the Small Business Administration, commonly referred to SBA. And before I get into the content, I kind of want to go over what this agency does. SBA is one of the smaller agencies. We don't have any sub-agencies. We are wholly dedicated to small businesses. We have programs to help them start, grow, expand, and recover. So I'll kind of get into our 4 core programs. First one is free business counseling. We do that through our funded resource partners. So we work with the Small Business Development Centers. There are 6 throughout the state. We also work with the Women's Business Center, and all this information will be on the next slide. We also work with SCORE, who does one-on-one mentoring. And most, if not all of these services are free because they're federal tax dollars. So you guys have pretty much prepaid them with your taxes. One of my favorite things to say to small businesses is you don't know what you don't know, especially if you're just starting out. It can be costly and frustrating, and these business advisors, they've owned businesses, they go through training, they counsel businesses day in and day out, so they're an incredible resource. They help with business plans or succession plans, or if you need help with financial projections before you go to a lender, they can help with any stage of your business journey. You'll hear me talk about them a lot, but they're just an incredible resource for small entrepreneurs, sole proprietors, all the way up to larger companies. They help everybody. Second is our capital programs. Most people know us with our SBA loans. They're pretty much a federally backed loan to our lenders. So we don't facilitate any loans in my office. you would go through one of your local lenders. You'd go through D11, Bank of Idaho, Zions, U.S. Bank, almost any lender in Idaho is an SBA lender. And we guarantee those loans. So if something goes wrong with the loan, we protect the lender and we make them whole. And what that does, it mitigates those loans, because especially startups, they're kind of risky, or in certain industries, they're risky. And so by us guaranteeing the loan, it really helps the lenders mitigate that risk and get this capital out to small businesses. All the way to the right is contracting. And so it's an incredible way to grow a business is to get into federal contracting, because the world's largest buyer of business services is the U.S. government. So it's a great way to expand a business, and we have a specialist in-house that helps small businesses get certified, because a lot of those dollars are set aside for small businesses, and then even more are set aside to special businesses, like a veteran-owned business or a women-owned business or socially economic disadvantaged business. So we help you get those certifications so you can start bidding on those contracts. And last, kind of a separate arm of the agency, we don't really do it out of my field office, we do disaster loans. So we do physical disasters. The Stanley wildfires, we had disaster people up there. The mudslide in eastern Idaho over the Jackson Pass we were involved in. So we do business loans and residential loans for disasters. We also do economic disaster loans. COVID Idaho was the perfect example. It was just economic crisis for small businesses. Any loans and grant programs that came out of those congressional bills was through U.S. SBA. So we did all the Idaho, we did all the PPP loans. So anything with disaster, we try to hop in there and assist as well. So those are our core programs. And here's the contact information of those business advisors I spoke about. Additionally, all of us have fantastic websites. We have libraries, we have tutorials, we have templates. If you're wanting to start on a business plan, you don't know where to start, there's templates. If you are going to a lender and you don't know how to do a cash flow statement, there's tutorials on that. So all of us have really, really good websites. SCORE has a terrific one. SBDC, they have all their trainings and calendars. And we have a brand new, as of a couple months ago, Women's Business Center. So those are all our funded resource partners. Additionally, if you go and you'll see under SBA, the second link is My Office, is Idaho. You can go on there and you can click and you can see all the events that we offer in our district. A lot of those are virtual, so you can hop on. You can get virtual coaching, lots of stuff on QuickBooks, everything you can imagine. So definitely go check out our calendar, because all our resource partners, everybody listed on this page, also lists their events on my calendar since we fund them. So go check out the calendar, see if any of those trainings interest you, and they're free. So use your tax-paid money. This is another great website. It's housed by Idaho Commerce. We call it the Business Wizard. It's www.business.idaho.gov. And it's really cool because it has two different kind of sectors. So the first part of it is more of legality. So you type in what type of business you have. Okay, your construction. Okay, you have less than 50 people. And it will walk you through what type of licenses and permits you need. Then the other side of the Business Wizard is the Resource Wizard. So it tells you about investment opportunities. It tells you about local chambers, SBA loans, if you're into exporting, who to reach out to. So it's just a plethora of information on the legal side and also on the resource side. So it's a really good website to check out as well. All right, now we're getting into what I was assigned to talk about. Building your business model to owning and running a successful business. So I'll be focusing on a business plan, which I think is absolutely critical to running a small business. I can tell you this, if you are going to a lender, and it does not matter if it's a traditional bank or if it's some sort of investor like an angel or a VC, you will need a business plan. They need to know that you understand your business and that you have a growth plan. So it's critical to have a business plan. Business is a journey. Which mountain do you want to climb? You know, that equates to what are your goals? Which route? What are you going to, you know, what route are you going to take to make your goals? What resources are you going to use? What's your schedule to accomplish these goals? And what metrics? What are the milestones that you're going to measure your business against? I love this saying right here. Put your business on solid footing. Would you let a contractor build your house without a blueprint? Absolutely not. And that's what a business plan is. It is a blueprint of your business. It is a living document. It is not a one and done. Everybody knows the economy changes, right? Your industry will change. Your team will change. Everything about small business changes, so you need to keep this business plan as a fluid document and review it frequently. It could be quarterly, it could be monthly, but it helps you, having a solid business plan helps you be more flexible and helps you be adaptable. Failing to plan is planning to fail. I think that's a great life motto, and especially in a small business. So a lot of you, if you go into a business advisor, a very common document is called a business model canvas. This is not the same as a business plan. I think most of our partners do start off with a model canvas. I like to think of it as more of a feasibility of your business before you dive into a business plan. So as this slide states, a business model is a canvas is a strategic tool that provides a visual representation of a business's core logic. It is a one-page document, and the next slide will show you what it looks like. But it really outlines the core of your business and gets it all on one page so you can see it and see if it's feasible. It validates your business idea, it identifies potential challenges, and it refines your strategy. It's a great document before diving into a full-fledged business plan. So here's a business model. You'll see they all look the same. You can Google this. It is on all of our websites, SCORE, SBDC, SBA. We are the acronym alphabet soup. You'll see what's the problem, what's the solution that your product offers, your unique value proposition. That's great. What separates you from your competitors? Why should a consumer buy your product or your service? Channels you're going to market, what are your customer demographics, what's your cost, what is your pricing structure, what are your revenue streams. So again, this gets it all on one visible page. It's also a great tool. But then once you complete that, you get to head into a business plan. A business plan is going to outline your business strategy, your management and team roles. Even if you're a solopreneur or you plan on hiring like an operations manager in a year, a lot of people who review business plans like to see what you're looking for in that position. Even though you may not have it filled, what are the requirements when you hire that position? Market analysis is a huge proponent of a business plan. You have got to understand your market if you want to scale your business. It articulates your customer value. And the other core part is your financial projections. You've got to understand finances to run a small business. Business plan is great because, in my mind, it kind of forces you to answer a lot of questions. You have to create your vision statement, who you are, your mission statement. What are your people? What are your data? Issues, processes. The key elements you should include, and there's a few slides on this, a description of your product, what your target market is, what is your marketing strategy, of course your financial information, your business operations, and your business roles. Kind of a trick we hear from most of our partners in a lot of small businesses when you are developing your business plan. A lot of people write the executive summary at the end. You know, you go through the entire business plan. It gives you a firm understanding of each of the sections, and then you write that summary. You're going to have a company description. You're going to have a market analysis. And we'll talk about a value proposition later. Your organization and structure, I kind of hit on this. What is your mission and your goals? Really describe your product and services. Marketing plan and a financial plan. Financial plan, again, is critical if you ever seek capital. You've got to have this down pat. And if you don't understand the financial section, call the Small Business Development Center, call SCORE, call the Women's Business Center. They get your tax dollars to help you. They will help you create a balance sheet, a cash flow statement. They'll help you do your projections, so when you present it to a lender, you understand what these documents are. SWOT analysis. This is one of my favorite tools. My team and I do this every year, even for our own district. You're going to look at your internal attributes, which are your strengths and your weaknesses. Strengths are what's good in your company. Weaknesses, what are the opportunities that you can improve on? You know, what internal weaknesses could damage your company? And then the next two are external. What are your opportunities? That could be your industry growing in Idaho. That could be the economy of Idaho. That's not internally based, that's external, but it's still a great opportunity. Also, there's threats externally that you have no control over. Once you understand these and how they might affect your small business and your industry, you'll be better prepared. So one of the core components of a business plan will be your marketing plan. So these are the elements of a good marketing plan. I'll start in the top right. Of course, business description, market research, and pricing analysis. And this is one of the areas I highly suggest that you reach out to one of our business advisors. Pricing your product is critical. You don't want to price too low. You don't want to price too high. They can look up industry trends. They can look up industry in Idaho and help you with a pricing structure. Customer profiling, who is going to be purchasing your product or your service? A competitive analysis. What are your marketing goals and objectives? How are you going to carry those out? What is the budget to do this? And how are you going to measure success? So those are all key elements that you want to build into your marketing plan. So these are some of the questions that will help you get to those answers. What makes your product or service unique? I tell this example in a lot of the trainings I do is Shields opened last year, maybe 18 months ago. Great big sporting goods store here in Boise, actually Meridian. But we have Cabela's, we have Sportsman's, we have Dick's, we have Al's, we have Big Five. I mean, there's a dozen of these stores. What makes Shields so popular? It's the quality of their goods and it's their customer service. They market that. They market their customer service. They market that you can return any product. I know all this because I have two girls that work there. But, I mean, they're not unique. They're a sporting goods store. They offer the same as Cabela's, but what sets them apart? And that's what you need to look at in your company. You know, if you're a bakery and there's 10 other bakeries in your town, what sets you apart? And once you identify that, that's how you market yourself. You need to know who your target customer is, because if you are marketing to the wrong demographic, you're missing business and you're spending money. Who are your competitors? What is your message? And how will you market your product or service? Conduct market research to assess trends. Again, go to our business advisors because they have subscriptions that you can utilize for market research. Why pay your own money? They know how to navigate all these services. Another good place for business market research is a library. A lot of these libraries, I know Boise and Meridian do, they have business sections. They also have key subscriptions to industry reports, and they have dedicated people to help small businesses do research. So go to one of our business advisors or go to your local library, but make sure you ask for assistance with business. Use that research, help find your market niche, determine how to position yourself to meet customer needs, and learn how to describe your product or service's value. You've got to know your value proposition. You've got to be able to express it to your targeted audience. Kind of went through this market research. It's going to help you find your target market. Through the research, you're going to find your demographics. Are you marketing to males aged 20 to 35, or is your target market women 60 to 75? If you don't know your target market, you're missing a crucial area. Competition, you have to know your competition, the strengths and weaknesses, how you compete against them. It could be messaging, it could be pricing, trends. You absolutely have to know industry trends and customer trends. Is your business cyclical? How do you manage the budget on the off seasons? Very, very important to do your market research. I think we covered most of it. Know your customer, the right message, understanding your brand. Sell the experience, not the business. I kind of talked about that with Shields. I think another great example of that is Chick-fil-A. I live in North Meridian, and there is 5 chicken places, I swear, on every corner. It's like in the last year, every week there's a chicken place that opens up. Chick-fil-A still nails it because their customer service. You never wait. They hire extremely great people. Everybody has a good experience there. It's not necessarily the product they're selling, which is yummy, but it's the experience. When you go somewhere and they have good products, but you have terrible service, you're probably not going to go back. A lot of sales is the customer experience. What benefit it brings the customer, and you have to be consistent. It goes back to the team. I'm going to use Shields a lot just because my daughters work there. These are entry-level college kids, and they go through 4 interviews. And the reason they do that is because their customer service begins with their employees. They ensure that everybody that walks through those doors has excellent customer service and they have a good experience, because that's how you get repeat business. I was floored that my daughter had 4 interviews, because for a federal job at probably 5 times the wages, we do 1, maybe 2. It's incredible. They're very, very serious with customer service. They put all their employees through an in-depth training. My daughter has weekly trainings on what she sells, because they pride themselves on product knowledge and customer service. Again, it all goes back to that customer experience. And then once you know that, you need to know what channels. And again, are you selling to a young man or an older woman? What channels are you going to use? Because if you have an older demographic, they are not selling through TikTok. But if you're selling to a 20-year-old, that's where you need to be focusing on. Again, understanding who's going to buy your product, what value are you offering, how are you different from your competition, how is the best way to reach your audience, how will you get repeat business? And again, that's back to a customer experience. How frequently will your product or service need to be purchased? A lot of consumers shop on the what's in it for me concept. Focus on the benefits rather than the features. What problem are you solving for them? A lot of people, they may have a need, but most of them based on emotion. Create an emotional connection with the customer. Want a new customer? Oh, I love this one. Partner with other small business owners who target the same market. Short-term joint promotion or long-term strategic alliance. I've been doing some trainings over in Salmon about 1.5 years ago. About 12 people came to the training. By the time we left, about 6 of them had found a way to co-promote their products. They weren't direct competitors, but they were in the same market. It doesn't matter. A couple of them did promotions with each other, or it could just be having each other's information at your business. But just working with your community and working with other small business is a great way to collaborate. So we kind of discussed emotion, solving a real problem or inconvenience they're experiencing, also reducing a fear or limiting a risk they are feeling. I have family that is into prepping, right? They have food storage for 6 months. They have bug out bags. It's great. It's not a need. It's a fear. You know, what happens if there's that solar strike? What happens if the world stops? They're prepared. It's not an immediate need. It's an emotion. Give a new perspective for your product. Exceed expectations. Help them enjoy the benefits. Help them feel understood and valued. That's such a key point. When somebody walks into your store, when somebody visits your website, they want to feel heard and valued. This is a great little diagram to help you develop your value proposition. And I'm sure you can Google lots of examples, but it's a key component of a marketing plan that outlines the unique benefits your company offers and explains why a customer should choose your product or service over the competitors. On the right-hand side, here's a customer, right? They have wants, fears, and needs. Here's your product or service, the experience you offer, what are the benefits, what are the features. So you need to decide what customers. Are you selling on wants? Are you selling on needs? Are you selling on fears? The prepping community versus selling massages, that's two different things. And massages is a want. I love massages. I buy them just because I want them. Marketing strategies. Once you have your target demographic, create messaging, taglines, product descriptions, call to action plan. I'm going to go down a rabbit hole for a little bit. If you need help with this, our wonderful friend AI is fantastic to help with marketing strategies. It's free. There are so many. ChatGPT, I think, is the most popular one. If you really utilize it, I would pay the $20 a month because it's more current. It's a better version than the free one. So if you're just playing around with it, go to the free one. You can upload your business site, or you can tell them what your product is and ask them to create taglines or product descriptions or a call to action. It's fantastic. You can upload your site and ask them to create a weekly layout of posts to your Instagram or Facebook or TikTok or wherever you post. They will create posts and they will post them for you. I mean, it's amazing what they can do. It's time saving, and they do really good stuff once you're able to train them. Really good at marketing. That's the end of that rabbit hole. Second is promote your product. Networking is great. Join your chambers, join your associations, be a part of your community. The more you can get your business name out there, the better. Create collateral. Flyers, press releases, printed material, and I need to update this, digital. You need to be online. You don't have to be on every platform, but you have to have some sort of social media engagement. Develop branding, create brand awareness, distinguish yourself from competitors. Second, this is a lot, we're going into preparing your financial plan. Again, if you're ever seeking out capital, this is so important. And I think it's important anyways, because if you understand your finances of your business, you're that much more successful as a business owner than chugging along and finding a surprise down the road. So a financial plan is a vital part of a business plan that shows how the business will generate and use money. Financial projections, these are great. It's a sales forecast, an expenses budget, a cash flow statement, a balance sheet, and a break-even analysis. And by really understanding your financials and going through these exercises, it helps you become more realistic with your business so you can plan better. most companies, they don't come out of the gates and break even the first month. Knowing that, you can plan better. Going through this helps business owners and investors to evaluate the feasibility, the profitability, and the risks of the business idea you're presenting. Helps you guys plan for growth, manage cash flow, and allocate resources efficiently. And again, be realistic. Make sound assumptions, update regularly to reflect the changing market conditions. And if I haven't mentioned this before, this is the great time to see a local business advisor. And they all can do it virtually online as well. But it's so great to get a second pair of eyes. Most of these, the SBDCs, the WBCs, they have financial experts. Former bankers, they work with bankers. They'll help you get your financials in order. Methods of financing. This is a great slide because small businesses, and I think the stats are on the next page, they don't all get their start with a bank loan. It's hard, it's risky. You know, you may not have the equity saved up to inject in the loan. So here's the different types of ways to get money. First is bank and credit union loans. Second is a microloan. SBA has a microlender in Idaho. It's Janus. We also have one that operates in Idaho, Business Impact Northwest. They also host our Women's Business Center. They do microloans. They're for a little bit riskier loans. They're for smaller loans. I think they're up to $200,000. It's an incredible asset for a small business. Seller financing, we see this a lot. Somebody is buying part of a business or buying over a business, and the seller will take part of the loan. Very common, we see that. Credit cards, like it or not, it's a great way to bootstrap your business. That being said, I always say treat it exactly like a personal credit card. It's a great tool, but don't get in over your head. Don't get into a hole that you can't get out of. Lines of credit, these are through banks, so instead of having a term loan, like a 10 or 15-year loan, this is a line of credit that you revolve. It's really popular for working capital, for inventory, for payroll. You need money, you draw down the line of credit, you pay it off. You need it, you pay it off. You draw it down, you pay it off. It's a revolving line. It's a great tool for finance. Leasing or dealer financing, if you are buying equipment, I always tell businesses, check with your dealer first. Oftentimes, they have better financing than a bank. So it's a really great way to finance equipment or fixed assets. So always ask first. Personal equity. You may have liquid assets that you can put into your business and bootstrap it. Friends and family is another popular one. This is Shannon's 2 cents, not my SBA hat. Treat a family or a friend loan like you would a bank loan. Set up a repayment plan, get a promissory note, and honor that. It makes Thanksgiving dinners that much better. These people are helping you out. Treat them like you would repaying a bank. Crowdfunding is getting more and more popular. In fact, last year, my agency allowed that to be equity injection into one of our SBA loans. Crowdfunding for business is a little bit different than what we see on Facebook. You know, when somebody has a medical emergency and they're trying to crowdfund money, it's actually a business campaign. There's a lot of information out there. There's crowdfunding platforms just for business. Kickstarter is a real popular one, Indigo. But the mindset is you're helping a business in your community. A lot of people like to see small businesses in their community, especially smaller communities. This is their way of helping out a community. So you're not begging for money, you're asking for community involvement. And there's different ways to do crowdfunding. I've seen all sorts. You can do equity, which, you know, is risky, giving away part of your business. But a lot of people do a reward crowdfunding. If you're opening a restaurant and somebody donates $25, they get 2 free meals. Or if you're opening up a t-shirt shop, they get a free t-shirt, you know, when you're up and going. So crowdfunding, there's a lot of different ways, and it can be very beneficial for a small business. There's actually advisors. I think here in Idaho it's called Crowdfund Better, that helps businesses with a crowdfunding campaign, because it's kind of, you can do it once or twice, but you can't constantly be crowdfunding for your business in your community. So it's really helpful to look into it, structure it right, but it's a great tool to raise money for your business. We see it a lot in the Boise area. Last one is investors, all sorts of investors. You have personal investors, angel investors, CV for more of the techie stuff. Just always be cautious. Again, work with a business advisor. You don't want to give away too much of your business because it impacts a lot of things, but it's a great way to raise capital. Think of Shark Tank, right? Fantastic shows, and it shows exactly how equity works. So in a nutshell, that is different ways of financing. Kind of some facts. Grants. There's really no small business grants. There are some very specialized grants. In my agency, we don't do business grants. We get calls all the time because scammers like to say, we'll give you an SBA grant. We run one grant program. It's very, very high level. We don't give the money out. 11 different agencies do, and it's for high-tech R&D. So if you, like, Department of Defense will put out a bid for a company who can create a national satellite cybersecurity system, and it's an R&D. So it's a very particular grant. I know USDA will do some sort of grant to help with energy upgrades, but it's a partial grant to a loan. So we get lots of calls saying, hey, I'm a woman-owned business. Can I get a grant to start a business? That really doesn't exist. So again, it's about being realistic on financing. Only about 20% of businesses start with a bank or credit union loan. Your projections must show repayment. And again, that is knowing your finances and knowing your projections. And if you can't show repayment, you're most likely not going to get a loan because a bank's not going to give out money if a business can't repay it. So definitely know your finances. And financing will take longer than you think. Don't wait till the last minute. It is not like a home loan. It is not like a consumer loan. It's a lot more complex underwriting. You can't apply and get a business loan in a couple of days. Lines of credit are a little bit quicker, but if you're looking for a real estate loan or a fixed asset loan, it's going to take a few weeks. So be realistic, be prepared, don't wait to the last minute. Financial plan, choose realistic time frame for your model, detail your assumptions, define what unit sells, calculate revenue, units, unit price, cost, your margins, all great terms you can look up on our website to get a better grasp of this. These are the 3 key statements that should be in your financial portion of your business plan. A profit and loss, also called an income statement. It shows the financial activity over a period of time. Balance sheet, condition of a business as of a fixed date. I kind of like to expand on this because I'm not crazy about this definition. Essentially, a balance sheet, if you're not familiar with it, on one side, it's going to show everything that you owe. Your own. It's going to show your assets, your liquid assets, if you own equipment, if you own real estate, it's everything you own. On the right-hand side is everything you owe. So if you have loans for the equipment, if you have loans for your business. And so it boils down to you want the left-hand side to be stronger than the right-hand side. What you own should be more than what you owe, or else you're upside down. So lenders will look at that. The last one is your cash flow statement, and it's exactly what its name means. It shows the cash coming in and out of your operations. Again, please go to our website. You can find examples of all 3 of these on any of our websites. There's calculators that show you how to walk through them. A lot of great information to help you before you put it in your business plan. What lenders are looking for? The 5 Cs are alive and well. They look for character, personal reputation, management experience. I will say this, from back in my lending days, if you have hiccups or maybe some sore spots in your personal credit, talk to your loan officer about it. Your loan officer is part of your business team. The more they know about it, the more they can help you. Say, for example, you have a very low credit score because you got in a horrible medical accident. You had collections with the hospital, but you made an agreement with them. You've been paying them for 12 months. Everything is on the up and up. When your loan officer takes that loan to the committee and he can say, hey, this is what happened with the credit. They have a repayment plan. They've been paying. They only have 6 months left. It will go so much further than that loan goes to underwriting. They see that credit score. They see collections, and it's denied. So the more honest and the more upfront you are with your loan officer, the more they can help you. So always be. That being said, if they find out something through underwriting or if they find out something down the line that reflects your character, they do not want to, for lack of a better word, be in bed with you. They don't want to be in a relationship when they can't trust you. We get a lot of lenders will call us and say, hey, because we have a government check system for loans, and they'll have a loan gets turned down, like, oh yeah, because they owe the SBA, I don't know, $200,000 from 15 years ago, and they walked away on a loan. So once that lender finds that out, they don't want to do deals with them. So again, be honest and have good character. Next one is your capacity and cash flow. Again, a lender is not going to make a loan if they can't see cash flow and if they can't see repayment. Collateral is assets to secure the loan. This is especially important if you're getting a larger loan for equipment or real estate. Those items will be used for collateral, so be prepared for that. Capital contribution, skin in the game. If a lender is giving out their funds, they also want you to be invested in your own business. So be prepared to also put money into it. This is one of the really good parts of having an SBA loan is we mitigate a risk so that cash injection is lower. So instead of about 30%, lenders can go about 10 or 15%. And going back to crowdfunding, lenders can take that as equity injection into the loan. So if you need a 10% down payment and you only have 5%, you can crowdfund for that other 5%, and the lenders could take it. They also got to look at the condition. You know, especially through COVID, some industries skyrocketed. Tourism did insane here in Idaho. Restaurants, not so much. But now conditions are totally different. So are you in an industry that is falling behind, or are you in an industry that is rising? So they do look at the condition of the market and the industry. Something else, I have about 10 minutes left. If you are a small business and you're applying for a loan, definitely be prepared to have your personal credit utilized. A lot of people forget about that. If you're starting out, you don't have a business credit score. And a lot of times the lenders will look at, it's called a global analysis. So they will look at your business credit score and your personal credit score. And the newer you are, the more emphasis will be on your personal credit score. As your business grows and you get larger and larger, that pendulum kind of swings to being more on your business credit score. But always have your personal stuff in order because it will be looked at when you apply for a business loan. Wrapping up, when you're working on your business plan and you're scaling your business, always make your goals SMART. Make them specific. You cannot reach a goal when they're vague and idealistic. You can't just say, I want to make more money in 2025. You have to say, I want to increase my revenues by $12,500. You now have a specific target. You want it to be measurable. You need to know if you have or haven't reached your goal. You need to make it attainable. You can't, if you're a brand new business, you can't say, I want to break even and make $1 million in my second week. It's got to be attainable. It's got to be relevant to your business, and it's got to be time-based. So again, instead of saying, hey, I want to make more money, a SMART goal would be like, I want to increase revenues by $12,500. I'm going to accomplish this by really leaning into my social media engagement and increasing that revenue stream. I'm going to give myself 12 months to accomplish this goal. You're going to lay out action steps. It's specific, and you have a timetable. So this is throughout any part of your business, even personal life. SMART goals are attainable. Vague goals are not. Business plans do not have to be complicated. Vision, SWOT, sales forecast, core market. I have seen 50-page business plans that I just get lost in because they're fluff. I have seen 15-page business plans that are just dynamic because the business owner knows their stuff, they know their business, they know their industry, they know their financials. It does not have to be a novel. People just want to know that you understand your business. My second point, unless you are absolutely up against a wall to get a business plan done, do it yourself. Do not pay others to do it. They charge a real pretty penny, and it's your information, it's your business, you're the one supplying the information. There's business plan templates on all of our websites, and you have advisors that will review it for free. A lot of these business plans, marketing plans, they're scams. So call us, call one of our business advisors. And I also think if you do it yourself, you understand your business better. Having somebody else do your homework, you don't understand it, right? If it's overwhelmed, just start in small steps. Say, okay, I'm going to start with my market research. Then in 3 weeks, I'm going to meet with a business advisor. Then in 2 months, I'm going to start working on the financial part. You know, if it's overwhelming, just break it up. Unlock and unleash your innovation at your business to stay relevant, to grow and thrive. Prepare to plan and be agile and inventive. Doing this business plan will help you understand your business. So when something happens to your industry, when something happens to the economy, you understand your business well enough that you can pivot. And that is essential as a small business. Measure your productivity against industry benchmarks. This is another area that a business advisor can help you with. Set aside time each week to work on the important stuff. This is so important to a small business. You guys are hustling. You guys are working in your business day in and day out. You have to set time aside to work on your business. You have to help your business scale. You have to do it correctly, and it's hard when you're working in your business. So just block aside some time to work on it. Be able to pivot, change in business strategy without changing your vision. Repurposing your assets, your market might change. You might have to change your value proposition. But pivoting is essential to small business. And that wraps up my portion. Here is my office's number, and it was on a previous slide. Our website is just www.sba.gov/ID for Idaho. You can see all the tutorials, all the information. You can see all our training classes by my office as well as all our resource partners. I think right now there's about 6 pages of trainings up there. So definitely check out our calendar and see what might help your business. And Steve, that's all I've got.
Well, thank you, Shannon.
Yeah.
And we got done on time, even though I went way long.